Hello and welcome to my channel. My name is Angoli. If you're coming across my channel for the first time, thank you for stopping by. I make videos about living and thriving in the United Kingdom with a focus on Scotland. And if you like this sort of videos, consider subscribing and then click on the notification bell to get notified whenever I upload new videos. So today we'll be discussing all about mortgage. I came across an article which I find really interesting and intriguing, and I thought to make a video on this. So I came across this article that was talking about this mortgage or these new mortgage providers that would be most likely providing mortgage to people who would otherwise not be able to get on the current mortgage lenders we've got at the moment. And so it was talking about this mortgage that is spread across 40 years and how many times your salary you are allowed to borrow by this lender. Now, the article wasn't exactly saying that this is fantastic, oh, this is great for people who are looking to get mortgage. No, it wasn't exactly saying that. It just put out all the information out there, and then it's left to people who read it to come to their own conclusions. So after I read through this, I was thinking, would I really go for this kind of mortgage? And I'm going to go through what the analysis they've put out there, and then I'll put out my own opinion. And I would like to hear your own opinion as well in the comment section. So the article gave an example of a household that earns £60,000 combined income for the household. Now, bear in mind that the last financial year, they said the average UK household income is sitting at about 38,000. So this 60,000 would be a family that is actually above average. So remember that this 60,000 is combined household income, all the money that comes into the household. So with this 60,000 combined income, they were saying that with this mortgage lender, because you can borrow up to 6 times your salary, this family that earns this 60,000 would be able to borrow just over £350,000. And then in line with this new mortgage provider principle, they would be able to spread it across 40 years, and then the interest rate would be just under 6%. It's a good thing that this website has done all the calculations, so I'll just follow their calculation to see what you would actually be repaying if you were to go with this mortgage. So for this £60,000 combined income, which is being assumed that is coming from 2 people working in the family, this couple or this family will be bringing in just over £4,000 per month after tax. But then they accounted for tax and just the normal tax and the national insurance. They didn't include their pension. So if you actually include the pension, which a lot of people do, actually contribute to their own pension in this country. If you work here, you would know that most people actually contribute to pension. So if they were to contribute to their pension, then the money that would come in would actually be a bit lower, or actually significantly lower than this £4,070. So after this family has paid their mortgage, out of the £4,070 which they bring in monthly, after they've paid their mortgage from this money, they would have just over £2,000 remaining. That's £2,119. That's what they would have remaining. And again, like I said, I feel like we need to take out the pension, because they most likely would be contributing to pension. So if you take out the pension, and from my own experience, then the pension you'll be taking out, let's say we take out roughly £250 for the 2 income, then they would most likely be left with something around the figure of £1,869 per month after they've paid their mortgage. So the first thing that jumped up to me was that if you were to spread this £350,000 or just over £360,000 across the usual mortgage term or usual mortgage length of time, which would be around 25 years. A lot of people tend to go for 25 or maximum 30, but 25. If you were to spread this across 25 years, then it would be very easy to see very quickly that this money or this mortgage would be unaffordable to this family that earns this £60,000. But then this lender, they create the illusion of affordability by stretching it over this 40-year period. So when they stretch it across 40 years, then it starts to look like it's affordable. And even with the 40 years, when you look closely, it's easy also to see that this is probably setting a trap for yourself down the road. The lenders might approve a high amount for you because they look at basic expenses and think, oh, you should be able to afford to pay this if you've taken off, once they take off your basic expenses. But that doesn't mean that you should accept that. By the time you take out feeding, electricity, council tax, and all the uncountable bills those of us who live here know that we pay, by the time you take all of that out, you find that there'll be very little left to think about saving anything. So unless there is a magic way that you can, when you take out this mortgage, your salary will suddenly bump up and increase, and then you'll be able to afford this as the years go by. Because they were also saying that when you lock this in for 40 years, you can also lock the interest rate down for 40 years, which means this amount of money, you probably are going to be paying it for life. Unless you can decide to remortgage after 5 years, but then you might not really get anything that is better than that. So you're probably thinking about paying this amount of money for a very long time. So unless you're thinking that your salary will magically improve, and that rarely happens if you're staying in the same field. Your salary might bump up really significantly if you were to go from a low paying job to a higher paying job, like switching fields. But if you stay in the same field, even with promotion, it doesn't really bump up that significantly. So what can one truly afford? If I were the one looking to get a mortgage today, what can I truly afford? And I'll start by saying that I would not be borrowing more than 3 times my family's combined income. So my household annual income, I would not be borrowing more than 3 times that. Even if it were offered to me, I wouldn't take it. And I would also not be borrowing for anything more than 25 years. Ideally, I would go for 20 years, but 25 years is stretching it, but definitely no more than 25 years. And then here, another thing with the interest rate is, I would not also want to go beyond 3%. But if for any reason I have to go for interest rate that is more than 3%, I would only lock it in for 2 years and hope that it would improve in the next few years, so I can, when I'm remortgaging, I might get something better. But honestly, I would personally want to wait. Getting a mortgage is a long-term commitment, and there is no harm in waiting to make sure that if there is anything that is not right or anything that is looking like it's not going to be affordable, there is no harm in waiting it out. It's better for you to do that than get yourself into trouble, and then along the line you might actually end up losing the home and all the money you've sunk into it. And aside from being able to make your monthly payments, there are other things which I feel that a family needs money for. So things like saving for emergency, maxing out your pension contribution, investing in stocks and shares, and also being able to have some money left over to make overpayments on your mortgage so that you can bring down how long it takes you to pay it off and also save on interest. And then even some money to enjoy a holiday. Life is not just about working to pay for this, pay for that. You need to have some money to also spend time with your family and enjoy a holiday. So if you ask me, a mortgage that needs to be stretched beyond 25 years to make it affordable is unaffordable. And a mortgage that also takes more than 25% of the household combined income when stretched over 25 years is also unaffordable. But then, that is my opinion. Thank you for watching, and I'll see you in my next video.